Hi, welcome to accounting. Today we're going to work on sales journals. Sales journals are special journals that are used for only one type of transaction. Special journals, like the sales journals, are created to save time because the journal entries are going to be the same over and over again. So we don't have to write as much information in the sales journal as we would in the general ledger because it has specific columns. So one of the things that you eliminate are the names of the accounts. So I have some transactions over here where it says recording credit sales. And then I have my sales journal template over here. We have room for the date, the sales slip number, the customer's account, posting reference. We're not going to post today, but if you were posting, you would put it there. Space for the accounts receivable debit, a space for the sales tax payable credit, and a place for the sales credit. These two credits should add up to our accounts receivable debit. So on May 1st, we have the company Werewolf's Moon Boots. And on May 1st, we sold moon boots to Davy Jones on credit and issued sales slip 100 for $100 plus sales tax of $7. So I'll come over to our date and we'll type in May 1st. Our sales slip number is 100. Our customer's account to be debited is Davy Jones, and we want to make sure that we record his name here because we're going to have to, in this chapter, keep track of who our accounts receivable and payable are. We're going to take a look at a subsidiary ledger. The subsidiary ledger would be underneath the accounts receivable ledger, and it would list all of the people who owe us money and the amount that they owe, and it should add up to the total of accounts receivable. But in the past, in Accounting 1, we've just been kind of writing down accounts receivable and not keeping track of who owes us money. But now we're going to move forward and be a little bit more precise and tell us who. We're not posting right now, so we shouldn't have anything for the post reference column. I'm going to skip past my accounts receivable debit for a second and go to sales tax payable. You can see in our thing here that says sales tax is $7. So I'm going to put in the sales tax payable is $7. And that should make sense that sales tax is a payable or a liability because we're going to owe it. We collect it at the time of sale from our customer, and then quarterly we need to remit it to the taxing authority. The taxing authority is generally the state, but it could be other local governments. If you live in Pittsburgh, Pennsylvania, Allegheny County, where the city is located, and where many people in the suburbs live around the city, charges an extra 1% in the county, so you would pay the 1% to the county and the 6% to the state. So it really depends on where you live and where the business is located, and you have to be careful with sales taxes. So the sales tax payable is a liability we'll pay, and the sales credit is $100. That's how much we owe. Accounts receivable will be for both amounts, so it'll be $100 plus $7 in sales tax. The customer will remit the entire amount in sales tax to us, and we will in turn remit it to the taxing authority. That's the way it's set up. But you can see that we have a debit for 107 and two credits also equaling 107. So our debits equal credits. And that's the way we want to keep this all the time in the sales journal. The next one we have is May 5th. And it says sold moon boots to Earl Sandwich on credit, issued sales slip 101 for $150 plus sales tax of $10.50. So we're going to come in and we're going to put in the date, May 5th. We're going to put in our sales slip number 101. We sold this to Earl Sandwich, so we're going to type in his name. We're not posting currently, so we're going to leave the post reference account blank. Our accounts receivable would be a total of the $150, which is the sales amount, plus the tax amount of $10.50. So we would record that there. I'm going to make these columns show tax or all of the pennies. And our sales tax was $10.50, and our sales credit was $150. So we can see that $10.50 and $150, the credits are adding up to our debits $160.50. So finally on May 7th, we had another sale. This was sales slip 102, and it said we sold moon boots to Tom Jekyll on credit for $175 plus sales tax of $12.25. So we'll put in Tom Jekyll's name here. We're not going to put anything in the posting reference because we're not posting. We're going to take the sale amount of $175 plus the tax amount of $12.25 for $187.25. Tom will owe us the entire amount, the sales price plus the taxes. We'll show that we owe a liability of $12.25 to the taxing authority and that we had sales of $175. When you are finished with a sales journal, when you get to the end of the page, what you want to do is total it up. So we will take and total the accounts receivable debit column and the sales tax payable credit column and the sales credit column. We'll find the final totals for all of those, and then we will come over here and we'll type in the word total. And this would be at the end of the month or the end of the page, whichever came first. And you would show your single line and your double lines to show that you're finding totals for the page. And then when we go to the next screencast, we're going to talk about posting. Instead of posting each of these individual transactions, what we're actually going to post is we're going to post these totals at the bottom to these 3 accounts. So that's why you go ahead and total them up. And again, it's a good check. You can make sure that $29.75 plus $4.25 is equal to your $454.75 because your debits should always equal your credits. I hope you enjoyed this screencast of sales journals, and I hope that you check out the next one on posting from a special journal to the ledger. Thanks and have a great day.